year-end special episode of Commodity Central here on ET Now. 2025 clearly has been the year of commodities, and within commodities, one segment that was shining brightest was clearly the precious metals segment. Remember, gold has surged a staggering 60% this year so far, and this after a solid 27% run up that we saw in the last calendar year. But guess what? There is one metal which has outperformed gold, and that is silver. Silver has more than doubled this year so far. Geopolitical concerns failed to ease, and that led to the up move. But apart from that, there are several other reasons. Safe haven demand continued to rise. Falling dollar index and increased buying by central banks globally also led to the up move in the precious metals market. But it's not just precious metals. Let's also talk about industrial metals, because copper crossed that $11,000 per ton mark on LME this year. And remember, it is up nearly 32% on a year-to-date basis. But on the flip side, oil, that one started the year at about $76 per barrel, but is ending below $60 per barrel, implying nearly 20% decline this year so far. But the big question now is, as we enter 2026, will the bull run of precious metals continue? Will oil fall further? And to discuss this, we now have Mr. Anindya Banerjee, Head Commodity and Currency at Kotak Securities, Peter McGuire, CEO, AustraliaTrading.com, and Mr. Nitin Kedia, National Secretary at All India Jewelers and Goldsmith Federation, now joining us. Gentlemen, thank you so much for taking your time out and joining us here on ET Now. And Peter, let me come to you first, and let's take a sense of where precious metals are headed next year. After the solid up move that we've seen, led by several reasons this year, do you expect the momentum to continue next year as well?
Well, good to see you, Ashishi. Yes, I do. And I think what we've seen in 25 has been extraordinary. And you can't argue with the numbers, and your introduction, spells it out very, very clearly. Up, double for silver. If you would have told me that this time last year, I think many analysts would have laughed. And gold up over 60%. Copper, as you mentioned, approaching 12,000 a metric ton. It's just been an extraordinary year from industrial all the way through to precious. And it's a very different year. You've got a US administration, central bank buying. The appetite on I think the retail sector has just been absolutely, all guns blazing. Regardless of where you are in the world, people are buying it, from Costco to lining up for street in the centre of the city in Sydney and going to bullion dealers and buying physical gold and silver. People are storing it because they're seeing that it's a market they want to be participating in. And what we've seen in 25 has just been, showtime. And I think 26 is going to continue that to the upside. And I'm expecting 26 to be a very exciting year.
An exciting year. But Peter, if you can take us through what your target price will be, both for gold and for silver, for the next calendar year.
I think I've got to keep 5,000 as on the scope of things. 5,000 US has got to be the first line of defence. I want to see conviction to get to 5,000. We've certainly toyed with 4,400. Down 38, 3,900, and then bounce back, and it's at 43.50, 43.60 as we speak. I want to see, Ashicha, really solid growth in that first quarter. If we're at 5,000, I'll review that when we get there. But I think the first line of defence has got to be 5,000. For silver, I'm thinking it's got to be 75, possibly 80, and I think both of those are achievable by probably Easter to the middle of the second quarter. So that's what I'm thinking, and I really don't want to go out on a limb any much further than that, because I think I'm going to be astounded by this time next year.
75 for silver. That's the target price coming in from Peter. Mr. Banerjee, coming to you then, what will your assessment be of where the precious metals market be headed? And if your view is positive, what factor in your opinion will aid this up move?
Thank you for having me. Yes, the overall outlook continues to be bullish, because see, when we look at gold, I'll first take gold and then move to silver. Gold, we can break the demand into three kinds or three pillars. First, the consumption demand. basically the consumption through jewelry. Now that demand is price sensitive, so when prices rise significantly, that demand tends to be muted. But what's been driving the gold over the past few years is the diversification demand, which is the demand from central banks to diversify away from their extreme concentration in the dollar, and also of institutions to diversify away from the financial risk. Now, that demand will continue to rise because we are going through an advanced stage of de-dollarization. And that's the reason why the central banks are accumulating gold by selling their fiat currency holdings. So that trend should continue. And institutions who are, especially in the West, who are largely underinvested into gold, we see that allocation rise. Now, the third pillar is speculative. They tend to get excited, overexcited, and then the overall position flattens. And that's what we are seeing right now in gold. There is strong speculative demand in silver, but in gold that is missing because gold is going through a time and price correction. So this is a good thing for the long term, the next 12 months. And we expect that from this launch pad, the gold prices to rise. Because if I look at the US economic, the macro economic backdrop, it looks like a K-shaped economy where the consumer is sinking and sinking hard. It is the AI and data center theme and the investments around that that's holding up the stock market and the GDP. Now, Trump is facing an election risk next November, and he very well knows that he has to spend a lot in the economy, and that has to be backstopped by the Federal Reserve, which means, in spite of the high inflation in America on the ground, Fed has to ignore that. They have already announced a backdoor QE of 40 billion a month. I think we could see the Fed cut rates aggressively and also look at somewhat a kind of a yield curve control kind of a mechanism, which means the dollar debasement rate is going to increase, which is very positive for gold and, of course, for silver. Gold can scale levels of $5,200 and can go higher than that because the currency debasement rate, in my opinion, can actually increase a lot. And second, coming to silver, it has a compelling case of the industrial story and from sectors which are seeing rising demand, the electronics, the electrical, and the whole solar industry. And every major economy is hoarding silver, declaring it as a critical mineral. We are seeing a sort of a fight evolve between the Asia and the West. Asia is buying silver, taking the delivery through either through ETFs or through other means. And West is trying to compensate that by doing derivative shorts, but that's creating a typical squeeze in the market. So silver can overshoot. Our overall target is around $80. We won't be surprised if it goes to even $85 or $90 in 2026. So both these metals look like an exciting story in 26 as well.
Bull run in precious metals is likely to continue next year, and $90 per ounce is the target that Anindya is now giving us. But Mr. Kedia, let me get you on board. And since you represent the Goldsmith Federation, now with silver crossing 2 lakh rupees per kg in the domestic market, gold has also surpassed that 1 lakh 25,000 rupees per 10 gram. What has been the response of customers to this? Are they buying more as an investment option in anticipation of surge in prices, or are they waiting on the sidelines expecting that the prices will fall in the short term?
Ashisha, in the month of October, we saw that there was a huge surge in demand coming from the customers, and in fact, the premiums they went up by around 15%, which we never saw in the history. And surprisingly, when it from 1,70,000 when silver came back to 1,45,000, 1,50,000, all the demand got evaporated. And what we have seen in last 1 month, in fact, the demand has not been a very encouraging for us if we just subside the marriage demand, which is coming right now for gold. The investment demand is not coming. The people are not coming and buying the gold. And that's the reason we are seeing that the silver is at the discount of around 5,000 to 6,000 from the import prices in India. And gold also twice or thrice in a week it is sold in a discount only. So we are just waiting that maybe when it crosses 2,25,000 or 2,30,000, maybe in anticipation of 3 lakh people will come and buy the silver, or maybe the gold if it crosses 1,40,000, then in the anticipation of 1,65,000 people will come and buy the gold. But as of the current situation, people are refraining from it and they are not buying it. And also they are not coming and selling, or they are locking their gains which they have bought around 1 lakh or 1,25,000. People, they are just holding the silver which they bought in the first 3 quarters of the year. Ashisha.
Expect then for demand to recover in the near term, in the next 1 to 2 months, since you're telling us that demand has been tepid after October. When do you expect a revival in demand?
Ashisha, we have been talking to many of the customers, those who were earlier a very prominent investor, or those who were very encouraged about gold and silver. What they are now in a mode of wait and watch. Means everybody is saying let 12-15% correction come and then we'll go and enter and we'll then buy. So I think if that correction comes, then we'll see some buy coming in the gold or silver. Else, we have to wait for some Akshaya Tritiya or something, some event like that for a demand to pick up. Else, we are not seeing a demand nowadays.
Okay, so you're not expecting demand to recover at least in the very short term. But Mr. Kedia, if you can tell us, how has wedding season demand been? I understand that investment demand is on the lower side, but when it comes to consumption, is that at par versus what we had seen same time last year?
If I talk about the value terms, it has increased because the gold prices have increased, but not in the volume terms. Average buying per wedding is approx 24-25 gram this season, and total value approximately there were around 45 days of wedding, so it's 49 days. Sorry.
Okay, so that's as far as the demand environment is concerned. But let's shift focus from precious metals then to the oil market. And Peter, this question is for you. Brent crude started at about $75 per barrel at the start of the year, which is now sub 60. This, of course, is led by OPEC Plus decision of hiking production through the year, although that is likely to pause in the first quarter of the next calendar year. Do you see more downside risk to oil prices as we head into the next calendar year?
Well, yes, I do, Ashisha, and I tell you why. And a couple of things. First off, we're over 20% down as far as price movement since the start of the year. So it's entering that bear market territory. Second part is we understand from the big beautiful bill that there's going to be increase as far as production coming out of the United States, and President Trump has got his hands all over it, and certainly their energy secretary. The third part is going to be a glut that we've identified, and this has been very much a part of the whole conversation as far as OPEC plus what's happening from a geopolitical standpoint. If we're looking at derailing anything, war premium has been taken out from the Ukraine situation, and also there's consideration regarding Venezuela, and that's a work in progress. It's very hard to speculate what that's going to look like, smell like, and taste like until we get further into the whole, as it becomes either turned from a volume perspective, turned up, or from a risk perspective, turned down. And that's what we need to be very conscious of, signal, not noise. So there comes the fourth part. As the prices continue and oversupply, and there's going to be a glut, this is what everyone's saying, then I think you're going to see softer energy prices leading into in first and second quarter. And that will be beneficial naturally for consumers, and very, very good point as far as inflation. So I'm thinking we're going to be very low in those as far as a WTI perspective, probably low 50s to high 40s. And if you're looking at Brent, I would think it'd be under $55 a barrel. Now you've broken 60, and I think that it's again, let's see where we are at the end of second quarter and whether this really starts to gain traction. And you might be significantly lower than that. But I just want to get through that first 6 months. These are very unusual times. I mean, crude oil down over 20% in a year, precious metals, we understand where industrial metals are, and the overall theme. So it's, I think 26 is going to be a very, very exciting year for traders, and I'm looking forward to it.
Go Power.
At a time when precious metals have surged so much, oil is down 20%. But Mr. Banerjee, would you concur with the view that oil prices perhaps could head lower from the current levels?
Yes, in fact, oil, if we it's currently stuck between a hard geopolitics and a soft demand supply fundamentals, because the geopolitical hotspots we are all aware of, the traditional Ukraine theater, the Iran one, and now the developing Venezuela. So that geopolitical risk premium will keep coming from time to time, but the overall trajectory is downward. In the whole demand supply situation, I'll just like to highlight one important thing. In 2026, if we go by the various forecasts, there it clearly shows that the non-OPEC supply growth would be enough to take care of the any 1 million odd demand growth which is expected by the leading agencies. So that's the case for 2026 and that's the case for 2027 as of now. Of course, some unexpected supply disruptions can change this dynamic, but as of now, that is the reality. In such a situation, OPEC will be under severe strain because should they try to sacrifice their market share to cut supplies further, but how much will that stabilize prices? That's a question mark. Or ignore all those things and go for the market share and see the oil prices drift down. And if the Ukraine theater, let's say, resolves in 2026 and Russian supplies start coming into the market, the pressure on oil prices can increase significantly. On the upside on Brent, we see the cap around 70 odd dollars. And on the downside, 58 is a major support on the Brent because it has not traded below 58 since 2021. If that were to break, which we think it should, then it can head towards the levels of 54 or lower over the next 9 to 12 months.
Consensus is that the surge in precious metals will continue, but the fall in oil prices is perhaps likely to accelerate further in 2026. And the most important factor to watch out for will be OPEC Plus. So, Mr. Banerjee, I understand that they've announced a pause. They will not be hiking output in January to March period. But what after that? What are you making of the kind of OPEC Plus announcements that we are expecting next calendar year?
Right. See, OPEC Plus, as I said, is they are not controlling this market right now because the non-OPEC Plus supply from North America and Latin America is enough to meet the overall demand. So OPEC is kind of stuck. As I said, the dilemma is whether to go for market share or to try and continue with the pause. But that pause is not enough because, as I said, they might have to cut supplies, which is not possible the way the OPEC Plus is now shaped. So, which means that we could see some kind of trying to talk the market up, but that's not going to work. So, OPEC Plus is a tough year ahead. And if the Russian supplies start coming back online with the resolution of the Ukraine war, then things could become even precarious.
Shift focus from oil and precious metals to industrial metals then, and that was also one segment which rather performed really well in calendar year 2025. And what stood out was copper. Remember, it has surged over 30% in this calendar year, led by several reasons. But Peter, what do you think? Will the upmove in copper, which was led by supply concerns in the global market, led by surging demand, continue next year as well?
Well, I think so, Ashisha. I feel as though 12,000 has got to be a psychological barrier. And I'm feeling fairly confident that that will be breached sometime by February or late February. So there's the first part of it. The trajectory, what we've seen over the last, well, this calendar year has just been extraordinary. And remembering that you've taken zinc up, aluminium and tin as well, and a number of other metals, but the overall appetite has been very, very strong. We understand the positioning as far as China, what's happening as far as President Trump and from a manufacturing standpoint, what he's trying to create internally with his economic engine that he's trying to rebuild. And naturally, copper's a wonderful barometer as far as economic growth and economic situation as far as global concerns. So yes, copper has got, I think, a nice leg up from here. And again, I just want to see when it gets through 12.5, what it's like as far as horsepower, conviction, and whether it splutters to get up there or it gets up there with quite a fair bit of horsepower. And at the moment, I think it's going to get up there with horsepower. So again, first half of 2026, I think is going to be a very exciting time for industrial metals. And yeah, the commodity boom. I, I I just want to share one thing. Jim Rogers said to me in 2006, I was with him in Hong Kong, and he said, as far as the commodity sector, we were sitting there at the Four Seasons place riding a push bike. And he said to me, the super cycle will last 25 to 30 years. Don't expect it to last less. We'll go through valleys and peaks over that period of time. Well, here we are, 20 years in, and it's an exciting time when you're looking at the market. So yes, this economically and from a population standpoint and consumption, I think industrial metals are going to perform quite well in 26.
And Peter, do you think we are in the middle of that boom cycle that is perhaps going to last for some more years?
I think the super cycle, I think the only thing that I think Jim might have got wrong was the duration, and this could outstrip a lot of previous cycles due to one economic boom. I've only got to go to your lovely country and I visit there frequently. You know, you just can't believe what's happening as far as have a look at the technology and the infrastructure that you've got just in cities like Mumbai. You know, the appetite across the globe is rebuilding and building cities, and that requires industrial metals. So yeah, I think it's going to be again a very exciting time, not only to look at the miners themselves, but certainly looking at the raw commodity and trading that. So yeah, it's a great time to be involved in these markets.
Okay, the right time to be involved in these markets. That's the word coming in. Mr. Banerjee, if you had to choose one metal that you're most bullish on from the industrial metals basket, which will that metal be? Will it be zinc, lead, copper, aluminium?
It will be copper, of course, because it's like this. It's like the silver of the pack, because it is perfectly positions to capture three big forces which are unfolding, which I talked about a bit during my precious metals commentary. There is de-dollarization, which means the debasement of the US dollar. So basically, hard metals, including copper, are all rising in dollar terms. It will only accelerate. Second phenomena is basically the whole industrialization, which Peter talked about. Yes, there are all the sectors from electrical to electronics to data centers, you name it, all the sectors of the future. They need copper in a large way. Third comes the deglobalization, because you have a de-dollarization and the criticality of hard metals. So you need to ensure, every country needs to ensure, every major country, that the supply chain is secured. One cannot depend on the supplies from another part of the world just in time. So that thing has broken down. So because of these three forces at play, the overall metal complex should do well. Within that, in the industrial metals, copper looks to have the most compelling fundamentals because there is a structural shortage. On the upside, we could see levels of $14,000. Currently, it's around 11,800. It's roughly 20% higher. It could even overshoot that. But we have to understand that there will be volatility along the way, because the financial shocks which can play out in 2026, be it through yen carry trade reversal, something happening with the AI theme, that can create these sharp swings in the metal market as we saw in 2025. So having said that, the overall trajectory looks upward.
Okay, so the trajectory looks upward and you see about 30% upside for copper prices. But before we wind down, Mr. Kedia, one last question. Since you interact with customers on ground, and precious metals is one segment which has outperformed all asset classes, whether it is Nifty, whether it is equities, cryptocurrency, all kind of asset classes it has outperformed. What is the sense that you're getting from customers? Are they expecting the outperformance to continue next year as well?
Definitely, Ashisha. See what has happened that if you take the last 6 months, the silver has gone double. On 2nd of June, it was trading around 33 cents, and today it is around 66. So now they are not talking about what will happen in 12 months of 2026. Now people talk about in what's going to happen in next 3 months, then 6 months, then 12 months. So what the sense we are getting that people are even expecting that in first quarter of 2026 we'll be having some 25% gain in silver and somewhere around 6 to 8% gain in gold. So people are very highly, I can say that they are energetic about the anticipations that they have on gold and silver. And I agree with the earlier part which Mr. Banerjee said, that when you have such kind of speculation, then you have to accept that volatility is going to be your friend. So I think the volatility is going to be our friend, and in these volatility only we may see a structure of demands coming, and we have to live with this kind of sales during 2026.
The outlook on precious metals continues to remain very positive, although most of our panelists believe that oil prices are headed lower in the next calendar year. Mr. Banerjee, Peter, and Mr. Kedia, thank you so much for taking your time out and joining us here on this special edition on ET Now. Thanks so much for tuning in.